Hey guys, happy Monday. I know Monday is tough, but it's 6 o'clock, so we made it through to Monday. I'm not out and about today doing open homes and so, but I did go out and try to get pictures and different things so I can keep you up on what's happening in the neighborhood. But I wanted to jump on here today real quick and share some information with you in regards to the payment of an average home in the Triangle area. And when I say Triangle area, I'm talking about pretty much the Cary, Raleigh, and Durham area. And also talking about this could be the surrounding areas as well: Fuquay, Holly Springs, Nidale, Clayton, Garner, like out Maybane, and Angier, those areas, because those are surrounding areas. But then, of course, if you know the area, they're probably about 30 minutes or so outside of the Triangle, but it's nice living. Really nice living. But I just wanted to kind of focus on the Triangle area, because the Triangle area is growing rapidly. People are moving in here from everywhere, and it's because of the demand. That there's a demand, there's jobs available. We have all the universities around us, the colleges, the hospitals, the laboratories and stuff like that. And even more is coming. We have Apple that's coming. We have VinFast that's coming. We have Fortnite that's coming. So the jobs are here, so everybody is moving in, and they're moving in rapidly. So just to give you a breakdown of the payment for average home in the Triangle. So let's do a simplified breakdown just to give you the idea. Okay, so these are assumptions that I'm going by, and the average home price in the Triangle, where let's assume is 350,000. A down payment, let's assume it's 20% down payment, which should be about roughly $70,000. A monthly, the loan amount will be about $280,000. That's the total home price minus the down payment. That's the loan amount. Total home price minus the down payment. And then we have the interest rate. So let's assume at a fixed interest rate of 4%, and the loan term will be 30 years, which is 360 months. So these are all assumption numbers of what we're going to be working with. So now let's do the monthly breakdown. Here we have principal and interest. So if you're using a loan calculator, the monthly payment of a $280,000 loan at a 4% interest rate over 30 years is approximately $1,336. This covers your principal and your interest. Right, so that payment that we're talking about, that monthly payment on the loan of $280,000 at a 4% interest rate for 30 years, you're looking roughly around $1,336, and that will cover your principal and your interest payments. Then we have property taxes. Property taxes vary by location. In North Carolina, the average property tax rate is around 0.85%. So for a $350,000 home, this would be about $2,975 annually, or approximately $247.92 per month, $247.92 a month for your property taxes. Then don't forget, you have your homeowner's insurance. The cost of your homeowner insurance can vary widely based on the coverage and the insurance provider. For estimations purposes, let's assume the average is $100 per month. So let's say your homeowner's insurance is an average of $100 per month. Then you have your PMI, which is your private mortgage insurance. So if you have a down payment that is less than 20%, you might have to pay a PMI, which again is your private mortgage insurance. The cost of the private or the PMI, the private mortgage insurance, you can start getting used to these terms, because if you're buying a house, these are the terms that you're going to hear your buyers, your lenders, and your sellers use. So these are terms that you need to get used to if you're going to do any transactions selling or buying your house. So the cost of the PMI can vary based on the loan amount, and there's other factors. So now let's put all of that together for a total monthly payment, right? So you have your principal, we have our principal and we have our interest payment for the month, which is $1,336. Then we have our property taxes, which we did the math for, which we got about $247.92. Then you have your homeowner's insurance, which we got roughly about $100. So your total estimate monthly payment will be about $1,682.92. Does that make sense to everybody? So when you're buying a house, these are some of the things that you have to consider for your monthly payment. So I just wanted to come on here and just give you a simplified breakdown or estimate on how they put your payments together. So how they come up with that estimate and monthly payment that you're going to make once you get a mortgage on your home. So I hope that makes sense. Of course, if you have questions, I'm here. You can reach out to me. We can talk a little bit more. But I just want to give you guys some knowledge on going forward, things to keep in your memory, in your mind when you're looking to do buying or selling of your property. Don't forget also, while I'm thinking about it, it depends again, like I said, on where your location is. Because if you're buying in a subdivision, subdivisions normally have a home association cost, right? They have maintenance fees, and then don't forget you have your utilities. So all of these things do add up in your monthly expenses. So you have to think about these things. Make sure you find out how much is your HOA fee or your homeowners association fee, because if you're buying in a subdivision, they will most likely have these things. If you're going to do lawn service, if you're going to do it for yourself, you're definitely going to have your own utility bills like water, electric, gas, and internet, whatever else you have. So these are also important to consider when you're doing your individual financial situation. And I would strongly suggest that if you're getting ready to buy, please get a pre-approval. Contact a mortgage lender and get a pre-approval, because pre-approvals are so important for many different reasons. It tells you, number one, what you could afford, because they'll go through all the steps with you. Your income, your income, then they'll go through your expenses and all of these other things, and they'll tell you what, based on that information, what kind of house you afford, how much house you can afford to buy. So you're not going into this blindly. You would have some knowledge of, okay, I'm looking for a house for $400,000. So you're not going to buy champagne with bare money. So in other words, so okay, this is what I was approved for, $400,000. This is where I can look. This is what I need. This is what I want with this money. And you're not looking for something above that, and then you get disappointed. So that's one of the main reasons for your pre-approval. And then for pre-approval, people know that you're serious because you're already starting to take steps towards buying your home. So they take you a little more seriously on that end. So with that, I would say if you wanted to get a more accurate and personalized estimate based on your specific circumstances, and I would say reach out to a financial advisor or a mortgage lender. And of course, I have several of those people that you can talk to. So if that's something that you want to start moving forward on, please reach out to me. And I can be reached at elisa.mclean@exprealty.com, or you can call me at 919-355-6468. It was a pleasure, and I will be back with more stuff, lots of more stuff. So have a good evening. Thank you.